ladies and gentlemen, and welcome to Morning Markets here on the True Potential YouTube channel. So yesterday we had Chief Investment Officer Jeff Casson on, and we discussed how markets had been a little more positive through July. So as that continued into August, I'm joined today by Paul Durrans, Investment Director. So Paul, just looking at the equities today, we can see them along the ticker, slightly down a little. Why is that?
Yep. So you're right to make the point that we've just come off a very strong month in July, one of the strongest months for global equities over the last 10 years. So yesterday we saw a little bit of weakness just at the margin. UK equities started off the day well, but actually fell towards the end of the day as oil and gas companies sold off with the oil price down over 9%. So a big fall in oil, and that came off the back of weak manufacturing data, which we'll come on to, and just general concerns around the strength of global economic growth. In terms of Europe, we saw marginal negative returns, and that was again led by energy and real estate sectors. And then US, again, slight negative returns, but no material or big driver influence in stock markets.
Yeah, one thing I did pick up on the news today was BP's earnings, the company earnings, record profits. So there are positives out there still, and
Absolutely.
We've got more company earnings to come this week. Is that right?
Yeah, there's that we're going through this round of corporate earnings. We've done a huge amount so far, especially with the US, but we'll start to see more companies coming through throughout the week.
So there's plenty of positives still to look out for, and as we say, the place to kind of stay updated with that is by watching on Morning Markets and subscribing to the True Potential YouTube channel. You did mention the manufacturing survey data. Would you like to tell us a little bit about that and how it affects our investors and viewers?
Yeah, so this is a monthly survey done on manufacturing and on services companies. Investors pay a lot of attention to these surveys. It's very timely and gives us a lot of detail, so we can look at not just at the headline level, but look at the level of exports, output levels, inflationary pressures, employment. So it feeds into a lot of economic trends today. In terms of what we saw yesterday, I suppose starting with the US, biggest economy in the world, so the most important for global investors.
And again, our clients, that affects them because obviously the US, as you say, a huge part of the portfolios.
Yes, typically the largest allocation within a global index is to the US. So it is the most influential. What we saw was that at a headline level, we saw some softness, and that was really driven by lower output levels. Production levels still holding up, but output is starting to decline. That's reflective of just some of the themes that we've been discussing on Morning Markets and on the podcast of global demand actually slowing. There are some positives out there. Employment continues to be a real positive. There's a lack of skilled workers, so there's high demand still coming from manufacturing businesses. And I suppose one of the other points that we've been talking about a lot on this, inflation, looking at the prices component, that actually dropped significantly. And that's really important, and that'll feed through to future inflation readings going forward.
So in terms of how this data can improve in the future, what actions is it that will need to be taken that we should be looking for?
What we're looking for is to see how that orders component fares. So what is the pace of global demand? Is that robust, or does it deteriorate, or does it accelerate? And then also that prices component. If prices are falling, it's good for the end consumer. And then just the employment picture. If that stays healthy, people are employed, they can afford to go out and spend and keep the economic cycle continuing.
So it's taking the long-term view in allowing this data to come through. And
absolutely.
And what else is yourself and the team looking at today and coming up later this week?
Coming up later this week, we'll get the jobs data on Friday. Really important because this really influences how the US Central Bank think about raising interest rates. We saw that come through a few weeks ago, last Wednesday, raising 75 basis points. If the labour market continues to be resilient and jobs being added to the workforce, then that will give the scope for central banks to continue to push up interest rates. If they start to see a deterioration, then that may mean interest rate expectations fall, and that's can be a positive for stock markets.
Yes. So subscribe to the True Potential YouTube channel, ladies and gentlemen, and Paul and the team will update us later in the week when that comes through. We'll also have to do more with your money show later this week, and plenty more on the True Potential YouTube channel. So please do subscribe. Thank you, Paul, for joining us today. A very informative update. Thank you, ladies and gentlemen, and we'll see you tomorrow. Thank you.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.